Good morning, good afternoon, good evening, folks. Michael Zuber, one rinse at a time, back with Mr. Dan Bird, who's helping me understand the stock market like I never have before. It allows me to remove the emotion, which is something that got me last time. Just look at the stuff that's going on. How you doing, buddy?
Doing great. Happy Easter, by the way.
Oh, happy Easter. Same to you. Let's talk about a couple of earnings last week that I thought were interesting. There were really kind of two that I thought moved the market, at least for me, because again, I'm following the consumer. And then we could talk about next week as well. You go with that?
Sure.
So for me, the two most important reports last week were CarMax and Wells Fargo, both because they're very anchored on the consumer. There was JP Morgan and Goldman Sachs and Citigroup and Morgan Stanley. For me, those four big banks, they're really kind of the 1%, the big boys. I thought CarMax and Wells Fargo were far more interesting because they're consumer orientation. What do you think of last week?
Yeah, I thought CarMax was interesting for a couple of reasons. Mm-hmm. One, just because their earnings weren't great.
Oh, you're underselling it. It not only wasn't great, but their forward guidance was atrocious.
Right. Which, back to what you were saying, reflects the consumer. Right.
Yeah.
Let's see. Let me show you a chart. We can talk to the chart here.
Yeah. So while you're pulling up the chart of the stock, the company, the consumer, for me, a couple of takeaways from the CEO, again, not only in the earnings announcement, but the conference call. One is he says consumers are looking for car loans greater than 84 months. Again, as a real estate guy, it's always a payment decision. A car, always a payment decision. And the fact now that we're going out beyond 7 years for a used car is crazy. And really, when I step back and look at real estate and understand how affordability has just become a crisis, it anchors me on my decision that the Fed or Washington, D.C. or Congress or whoever it is going to bring out the 40-year mortgage. Because housing is the same thing as a used car. It's unaffordable today. So one way you make it more affordable is you add payments. So yeah. I see a 40-year mortgage coming to housing.
I don't disagree. I mean, there's not really any reason not to do that. What's the average time that people typically hold their house?
8 years is average.
So who cares if it's 30 or 40? Other than you're not building equity as quickly.
Exactly. You're not building basically any for the first 10 years. Yeah.
Right. But still, like you said, it all depends on the payment. So the other thing that's interesting about CarMax is it is also one of the industries or categories in the inflation report that actually was declining.
Yeah, it was
used cars.
Oh, absolutely. It was. So, a CPI came out Tuesday, and by Wednesday morning, everybody was starting to trumpet, hey, look, inflation broke. Used cars finally went down, blah, blah, blah. Yeah, it was. I don't necessarily buy the story they're singing because the market is so weird. But yeah, it did break. Used cars were down for sure.
Well, like we talked about in the last session that we just did, everybody was talking about peak inflation. So that was just one data point that they could point to and say, see, we told you it's peak inflation.
Yeah, so transitory. We told you.
and I think it will, but
yeah,
there's lots of reasons why.
Yeah, and it's a bigger story. Yeah.
Mostly don't have anything to do with Russia.
Yeah, exactly.
So the other one was Wells Fargo.
Yeah, Wells Fargo is interesting to me. Just one, because I called it early saying one of these banks is going to talk about loan destruction, which was a really ballsy call I had, because we only saw half the interest rate bump in Q1. And for one of them, it turned out to be Wells Fargo, to point at loan growth falling 33%. That's a problem on a gigantic scale, because for the last 2 years, I don't know if you know this, but given that I track real estate, there was $4 trillion in loan origination in 2021. It's now forecast to be 2.6. That's a 35-40% drop. And if Wells Fargo is already seeing 33%, it means it's coming to other banks. Loan destruction is coming.
So it's an interesting conundrum. And I think we talked about this last week.
Mhm.
Yes, loan destruction, meaning they're not going to make new loans.
Yeah, loans, refis, cash out. It's a lot of just, it's going to be less money sloshing around in the system, right? I saw a report. I think the All In podcast talked about this as well. In the last year and a half, there's been $400 billion in excess capital wrung out of people's housing. That's money they can do whatever they want with, right? It's a cash out refi. That is now stopped. There will not be 400 billion going forward. That money is sitting in savings accounts.
And not only that, the people that did those cash out refis, as well as the people that bought new houses, well, did it with low interest.
Yeah.
So they're not, and now the interests are going up. Interest rates are going up. They're not going to sell. They're not going to move. They're not going to take on a new loan.
No, I did.
Why would they?
There's the Federal Reserve broke housing. They kept rates too low for too long. People were sub 4%, many of them sub 3%. They're not going anywhere for years.
Yeah, I'm not sure I would say they broke it. I would say they accelerated, they moved it forward. They moved all the demand forward by 5 years.
No, they broke it. Housing is one of those parts of the economy that there's always people coming in and coming out. We have relied on the move-up buyers to release inventory for the next first-time home buyers. That is broken. It is broken for the next 3 to 5 years. First-time home buyers are going to suffer because the move-up buyers refuse to sell. The move-up buyer is a two-step transaction.
Right.
No, I disagree. They broke it. It's broken.
Okay. Well, it's broken for 5 years.
Yes, broken for 5 years.
Which is kind of what I meant. They moved the demand forward by 5 years. So it's not it. They broke it in the sense that they didn't let it naturally grow the way it should have. They moved everything forward.
Yeah, and that hurts again, I'm thinking about the first-time home buyer who normally, like the millennial, wants to step in. They're now in trouble for 5 years because the Gen Xer is not going to give up the house.
So what about the sellers? What about the people that do want to sell? What are they going to have an easy time selling? I mean, they're going to be selling at a high price most likely, or will the prices come down as well?
I do not see price deterioration. I see real estate transactions falling 25 to 50% over the next 2 years.
I've already seen it, by the way, in the last month.
Nice. See, I love calling this stuff because I watch it every day. Prices will not fall. I mean, there will be some cities that get hurt, right? So I'm only talking nationally. We will not see the Case-Shiller index print a negative number. This is not 06, 07, 08 on repeat. It just, the math isn't there. Kind of like your inflation report we talked about in the first one, right? The base effect. There's still plenty of areas, Texas, Florida, going to go gangbusters. It's just not going to fall, in my opinion.
Yeah, I actually have the Case-Shiller report here.
Look at that.
There's what it looks like.
Man.
This goes back 20 years.
Yep.
You can see 30-year mortgages, how they fell off a cliff and they're starting to creep back up. But, even though people are talking about mortgages going up, and when I say it's already happening in my neighborhood, just in my neighborhood, in my neighborhood is $1 million houses.
Yep.
Houses were going on the market and selling in 1 day. I've got 5 now that have been on the market for 3 weeks.
It's happening. I'm telling you.
And have not sold.
Real estate slowdown is real. So this is what's going to happen. I don't know your 5 homes story, but generally speaking, there are lots of reasons to sell. I want to cash out. I want to move, death, divorce, blah, blah, blah. What's going to happen now is these 5 houses will stay on the market for 30 days. Those 5 people are going to yell at their agent. You suck, blah, 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 bee, bah, bee, bah, bee, bah. And what's going to happen is some of those people will have a price drop because they've decided to move. They've already spent the money.
Already happened on one of them.
Right. So that'll happen. Others will decide that the market just doesn't understand how special their home is and why their home should, have a premium price, and they will just decide to stay and take it off the market.
That just happened on one of the 5.
Shocking. It's like I know what I'm talking about. So that's why the market's just going to go flat. The people that have to sell or want to sell, they'll take a little bit of price cut. The other thing that will happen is, I don't know these 5 homes, but I'm going to guess at least 2 or 3 of them came out at a price that you thought was stupid.
Well, the one that they took off the market, they put it on the market 3 weeks ago at a price that was at least 200,000 more. I know it was 300,000 more than the highest price of that same model had sold.
Ever. Yeah.
And
See,
I talked to the owners, and they said, we just want to see if we can get it.
Yeah.
And they didn't, and they took it off.
There you go. Now, and again, what people need to realize, how can I say price drops and then price flats at the same time? A lot of people are going to be like that couple who just picked a number out of seemingly thin air and they didn't get their price. So just for example, in that case, 300K more than value. If they took a 250 price cut and then it sold, that's still an increase.
Mm-hmm.
Just because, and that's what people are wanting to scream and yell, Mike, price drops. See, you were wrong. Well, maybe. I don't think so. I think there's a lot of people that picked a number out of thin air that thought their house was extra special. And if they really want to sell, they got to come back to market, where in that case was 300,000 less, at which they decided, know what, we're going to stay.
Yeah, that's right. That's what they decided. And one of the other ones have dropped their price already. I think the other 3, if they really want to sell, will probably drop theirs too. So I think the prices are going to start to come down. And then we'll see. Maybe it will sell, or maybe they'll just take it off too and just wait. Who knows?
Now, so I really do think there are 3 markets, and I think you're in luxury, but let me describe them and you tell me, right? There's first-time home buyer homes, right? Usually older stock, maybe small. Then there's what I call move-up buyers, which is, hey, my family's a little bigger, a little nicer area, a little nicer school district. And then there's luxury, right? There's amenities and things around that. I'm going to guess you're in the luxury space.
Yeah, probably.
Yeah.
Although where I live, pretty much everything. Well,
yeah,
I won't say everything, but all I will say is I knew Naples, Florida had a lot of rich people. I had no idea how many rich people.
You never felt so poor in your life until you.
I know, exactly.
Naples. Yeah.
Yeah. When you go downtown, when you go to dinner downtown and you can swing a dead cat and hit a Ferrari.
Yeah, Ferrari, Bentleys, Lamborghinis.
Yeah, nice. Yeah. Then you know people have a lot of
so let's talk about earnings next week. Just to wrap this topic up.
Yeah.
So next week we've got a couple of big ones. We got Tesla and Netflix.
There's Tesla. Tesla is going to be an interesting one. Mm-hmm. They are projected to double their earnings from last year.
Yeah, if Tesla for me it's going to be their forward guidance, because Tesla has already released, as I understand it, I think it was 2 weeks ago, their deliveries for the quarter.
Yeah.
So I expect Q1 for them to be outstanding and good for them.
And I think that's going to be true of most of the earnings that are coming up. It's not going to be so much about their whether they hit their earnings for Q1, because I think a lot of them will.
Yep.
It's going to be more about what their forecasts are for the rest of the year.
And that's where I think Tesla might disappoint, right? They've just had Shanghai shut down for 2 weeks, 10 days. It's not back up, but it's supposed to come up in the next 24 to 48 hours, as I understand it. But who knows in China? They just did a big event in Texas and Germany. So Tesla is doing lots of wonderful things, but let's not be confused. There's been a lot of inflation in nickel and other things that are important in a Tesla battery operated vehicle. So I expect
and lithium too.
Yeah. So I expect them to talk about inflation. I expect them to talk about deliveries, maybe not being up to snuff, and obviously blaming Shanghai and in China. So it's going to be a very interesting report. I don't know. Right. Again, I have.
Yeah, that's what I would say about Tesla. If I'm looking at the chart, I can see lots of reasons why it's going to continue lower.
It's sub 1,000 now, right? It's under 1,000.
Yeah, it's below 1,000. Right. It was 985.
Okay. On
Thursday. It's got a consolidation here, which normally means, whatever it did before the consolidation, it will continue for the same distance.
Is the 200-day roughly 900?
200 is around 900. Yep. It's actually 889.
Okay, 889. Yeah.
The accumulation distribution line is right on the moving average and trending lower. That means big institutions are
Kathy
distributing.
Wood just came out and talked about Tesla being a $5 trillion company and a $4,600 stock.
Really?
She did, yeah.
Here's ARC's portfolio.
Oh, Kathy, not doing well.
Down 8%. Tesla is the fourth best performer though. It's up 16%.
Yeah, Kathy, not looking good.
Down 8%. These technology companies that I created this one back in October, when somebody on LinkedIn, a headhunter, said these are all the companies that people want to move to, people want to get jobs at.
33%. Yeah, not good.
This is from October 8th. Down 33%.
Yeah, and remind me, when did you create the Kathy Wood? Because again, folks, Dan has his own playlist on the channel. You can go back to when you created it.
Yeah, it was February 18th.
Yeah, so she's down 8%.
So 2 months, basically 2 months, down 8%.
Awesome.
So Tesla's going to be an interesting one. I don't disagree that their forecast might be the key for them.
Oh,
I mean, the 8 moving average is about to cross the 21, which is a key part for me. The 8 is at 1017 and the 21 is at 1004. So it's only got 13 points to go.
Yeah, that's nothing. And
yeah, that would be a sell signal right there for me.
Okay.
So unless it has a dramatic turnaround, I mean, this could go below that on Monday before.
Dude, it could do that at the open.
Yeah, at the open, right? Before their earnings.
Yeah, I think it does. Yeah, I don't.
Alcoa is also reporting. Alcoa has been a shining star, and it's in a great industry group. So this one might continue going up. One, just for your viewers, is in the same industry. It's a lot of times good to look at the leaders, and Alcoa is one of the leaders in aluminum.
Yeah.
But Century Aluminum is a sister company that has a chart that actually looks better.
Oh, wow.
And it's a little bit lower priced. So Century might be a good one next week when Alcoa. So it'll go in concert with Alcoa. Lockheed Martin is also going to report. I think the defense sector is pretty strong.
Yeah, with what's going on around the world, there's clearly more and more countries are going to be, even Germany is spending more on defense. Yeah, it's coming.
Tenet Healthcare, this is Tenet.
What about Netflix? Do you have that one in here by chance?
I don't, but I can bring it up.
Yeah, the reason I want to look at Netflix is they bombed last quarter.
Yeah, so here's Netflix. You see this big volume bar over here?
Yep.
That's where they bombed last quarter.
Yeah, dropped.
Their volume has been pretty low. Their accumulation distribution has just dropped below the moving average.
Ooh.
So big institutions are continuing to distribute.
Yep.
You can see it. You can see it's trending lower ever since back here.
Not good.
However, Netflix is not a bad company.
Oh, I didn't.
I think
you could be an okay company in a bad stock.
Yes, that is absolutely correct. And a lot of these stocks, a lot of those ones in the technology group, were way overvalued.
Yeah.
And they are still overvalued, even though they've had almost a 35% decline.
I would agree.
Since October.
Yep.
They are still overvalued, and we're still in the declining market. If you go back to the last session that we did and look at the market versus the economy, and we are in the early stages of a market decline.
Yeah.
Even though the economy is peaking and hasn't yet rolled over.
Yeah, that's going to be an important conversation. I want to steal you for a third video. I want to talk about that exact idea. So we'll save that for number 3.
Okay. All right. Any others you want to look at?
No, I think that's it. I think Tesla and Netflix are the big. Oh, Bank of America. I'm sorry, that's Monday.
Oh, yeah.
Let's do B of A.
BAC. Ooh, that's a bad looking chart.
Yeah, you would expect it's probably trading in concert with Wells Fargo.
Yeah, Wells Fargo and Bank of America are probably similar. Although Bank of America does have a trading desk.
Yeah, that's an ugly chart right there.
That's an ugly chart. Yeah. And by the way, going back to my 8 moving average and 21 day, you can see they kind of were crossing a little bit in through here, but back in February, mid-February
Ugly.
is when it crossed over decisively.
Yeah.
And
it's,
then it went below the 50-day moving average February 22nd. This would have been the time, if you were in Bank of America, that would have been the time to get out.
look at that. It's so far below the 50-day. Whoa.
Yeah, it's way down here. So I think they might have further pain ahead.
Ugly. That's a big one for me.
Although I will say, I mean, they could have a short-term bounce because the RSI is below 30 up here.
Reversion to the mean, maybe.
Yeah, so they could have a reversion to the mean, which is the 21-day up here around $41.
Yeah, crazy.
But I think before that happens, when they report Monday, it's probably going to go down, and then it might bounce back up.
Yeah, wouldn't touch that one. A lot of fun. One more. Do you have your newsletter handy?
Oh, sure.
Just want to remind people, if you're listening on the podcast, you need to reach out to breakpointtrading@gmail.com. Get the newsletter that I look at every week.
Yeah, just send me an email. I'll add you to the list, and I'll send you the most recent one. There's no charge for it. It's just research that I do on my own anyway over the weekend. So I just put it together was for friends and family, and now it's for a bunch of your listeners.
Awesome. Thanks, buddy. I appreciate it.
All right, you bet.